you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite low.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and today we're going to talk about the historical new home price decline and the fact that mortgage fraud that they're committing right now cannot sustain values. They are literally trying every trick in the book to keep these prices elevated. But as we go into the data, you're going to see that that is far from the truth. Prices are absolutely plummeting. And I'm also going to go into the fact that not reporting sellers' concessions is essentially mortgage fraud. I'm also going to show you guys that the prices are not going down as a result of shrinkflation. So we'll cover that also. And then I'm going to show you guys the usual data, the starts, what's under construction, the prices, and the supply. Because the reality is, guys, we are experiencing price decline right now with new homes that exceeds the GFC. Now, remember, you guys, I'm not a financial advisor, even though my bio is as a realtor, a loan officer, a CE certified instructor, a property owner, and a renter. And you're probably thinking, well, how can that be? How could you be renting yet you own right now? Well, if you stick around and follow me, you'll get the answer to those exact questions. And I also want to continue to remind you guys, what's the solution here? Well, it starts with you. And that's exactly why I have made you a free home buying course that I would strongly encourage you guys to take. But regardless, we're going to jump into the boring stuff first, the data. And then after we go into the data, I'm going to show you guys what the top 3 builders right now are offering as far as incentives. And then after that, I'm going to show you guys why not reporting sellers' concessions could actually shut down the entire industry as a result of the buybacks, early payoffs, and essentially lenders turning in loans that don't fall under qualified mortgages. And then after that, I'm going to go over the shrinkflation narrative, which is completely fraud. And I know exactly who's saying this. I had this silly goober make a post about how, oh, there's a delta. And I'm going to be honest, you guys, the delta is the stupidity. That's what the delta is. The delta was the person reporting this, because the fact of the matter is there is no delta. Home prices are absolutely plummeting, and it's not a result of shrinkflation. In fact, the median size house went up, not down. Stay tuned. Now, the first part of the video is going to be all Fred economic data. Everything is going to be linked in my description for you guys to be able to access at a later point if you really want to go into the data, which you might, because remember, new home sales lead price decline. I repeat, new home sales lead price decline. Now, let's start with permits. You guys can see that the permitting is still explosive. I mean, they have pulled permits on almost 1.5 million units. So there's no end in sight here. Now, obviously, that is down from a peak of 1.9 million back all the way back in December of 2021. And so that did plummet. But I also want you guys to know that has stabilized as of about February of 2023. And we are well over where we were pre-pandemic. So it is still surging. Now, this is the data for total housing units that have started. How this is different from under construction, it's kind of a dog and pony show, to be honest with you. But regardless, here's the starts. We're sitting at 1.46 million units being started. And again, same as that last set of data, it is off peak from about April 2022 at 1.8 million. But this is still well elevated compared to where we were pre-pandemic. So they're still building like absolute lunatics right now. Now, here's a chart that really shows you how much worse off we are right now compared to literally any time in history, but I was going to say to the GFC. Now, right now, as far as under construction, this is total units, this also counts apartments, we're at 1.67 million. That is explosive. Now, we've been basically at this 1.6 million since about middle of 2022. That has stabilized, as you can see, and it has remained historical. So we do have historical building going on right now, which is a good thing if you want prices to go down. We need more inventory, obviously, on top of the overwhelming unaffordability. Now, this is a great set of data because we can really analyze the supply and really indicate the reason why prices of houses are going down, other than the unaffordability and massive run up in equity. Because remember, you guys, we're not even in recession yet. We haven't even had any type of unemployment phenomenon, right? And yet the supply has absolutely exploded. And I do want to make a point that we have had 6 months or more of inventory for new homes, you guys, that has sustained since about February of 2022. So we've had 6 months or more for 2 years. Now, 6 months of supply is very, very important because that represents a buyer's market where the buyers have a lot more leverage to negotiate, where you have a better potential to get a great deal and sellers have less power over you. So again, since about February of 2022, we've remained elevated 6 months or more of supply, and that is a primary reason why prices went down. Obviously, again, the equity buildup is another reason, but what I wanted to point out, 2 years, 6 months or more of supply, and the prices have absolutely plunged. Now, right now, we're going to look at the median sales price. If we looked at the average sales price year over year is down over 14%. But what I really want you guys to pay attention to before I really go into this is right here where I'm hovering over is the GFC, okay? So we could basically see that prices during the GFC peaked at about 262,600. Now, they hit a low of 205,100. Now, that represents a decline of about 20%. But I do want to point out that is over a 2-year period. We don't have a 2-year period right now. And most of the time of new home decline was during the recession, which we are not technically even in right now. So expect prices to fall even more if we do experience a recession and unhinged unemployment. But I did want to point out, you guys, that we have decline in new home prices right now that are faster than the GFC. And if we go here, you guys, and we look at the peak, the median sales price did peak in October of 2022 at $496,800. It's now at $413,200, which represents a loss of value of a shocking $83,600 from peak, or rather 16.8%. Now, if we go to December and we look at year over year, so we compare December to December, it went from $479,500 in 2022 all the way down to the $413,000, which is a loss of $66,300, or a year over year new home price decline of 13.8%. And later on in this video, I'm going to show you what I suspect is mortgage fraud right now, and the fact that as a result of that mortgage fraud, the home prices have been propped up. So even though we have this massive loss in value, you guys, they're faking the numbers. They are supposed, it's a requirement by Fannie Mae to report seller concessions. I'll get into that, but what I want to do now is I want to show you ridiculous buying incentives from the top 3 builders, which is D.R. Horton, Lennar, and Pulte. But before I do that, I want to remind you of New Home Source. This is a great data provider of new home information. So first, I just want to show you that regardless of the builders, there's massive price cuts going on. Now, obviously, I've highlighted Austin. You can come here, put your own area, massive amounts of clusters in Austin. But look at some of these price cuts: $43,000 price cut, $90,000 price cut right here, $20,000, $22,000, $25,000, $169,000 price cut. You guys see that right now in Austin. And these are communities as well, you guys. So massive price cuts. Here's another one for $56,000. So if you want to see what type of price cuts are going on in your area, you should probably access New Home Source. Now take a look at some of the incentives the number 2 builder in America is offering, which is Lennar. I mean, they've lowered their fixed rate. This is shocking. This is shocking. The average interest rates as of the recording of this video is 7%. They're offering a rate 275 basis points below market. That's insane. The amount of money that cost is out of control. And this is what I'm saying. They are supposed to report that expense in the appraisal. Lennar is offering it on their website. They are the seller. They have to, but anyways, look at 4.25%, 30-year fixed rate, and $27,000 on price reductions on select homes. Oh my gosh, but it gets worse. Take a look at this bad boy right here. They're also offering a 3-2-1 buy down with a first year interest rate. Sit down for this, you guys. 1.99%. 1.99% the first year. The second year, 2.99%. 3.99% the third year, and it balances out at 4.99%. Oh my goodness. They really want to get people in their houses. Now, here's what Pulte, the number 3 builder in America, is offering something similar. Obviously, they have price cuts as well, but when I go to their website, it's showing right off the bat rates as low as 4.5%. That implies a 30-year fix of 4.5%. That's 250 basis points below market. That is astonishing. Now, when we go to DR Horton does not like to publicly advertise what they're doing. A lot of times you have to go into their sales offices, which I don't like, because a lot of times as a consumer, when you go into their sales offices, they can really kind of try to trap you. It's just my opinion, but they're offering a 1.5% rebate for new home purchases, which compared to the last two, that ain't even that good. So ridiculous buying incentives. Now what I want to do is I want to go over what's going on as far as what I view as mortgage fraud. When lenders get caught committing mortgage fraud, they shut down. They're charged back the loan. They get early payoffs and things like that. And I'm going to tell you guys, as being in the business for over 21 years, branches and companies do not have the ability to have buybacks or early payoffs. So once these people start getting popped for misleading the appraisal value, I'm going to tell you guys, it will be a domino effect. And this is no question. Everything that I am telling you right now is factually based. Let me show you the data, because obviously, y'all, the proof is always in the pudding. Now, this is a Fanny May letter that was released in December of 2023. This is an appraisal update. And really what I want to point out, you guys, is under seller concession concerns. This is what I've been talking about for the last year. I just want to read two sections. The first section is right here. Now, there are two components of our definition of value. So Fannie Mae said, you're going to sell loans to us. Here's our definition of value. I've highlighted the second one. The price represents the normal consideration for property sold, unaffected. This is the important part, unaffected by special or creative financing or sales concessions granted by anyone associated with the sale. Let me read that again, okay? The price represents the normal consideration, not these special creative, special financing, okay? The property sold has to be unaffected by special or creative financing or sales concessions granted, let me just highlight this last part here, granted by anyone associated with the sale. This letter goes on, and this is the most shocking part of all. Within the appraisal population, appraisals reported seller concessions for 7.6 million comparables. OMG. Of great concern for 58% of those comparables. So about what? 4 million, the appraisers made no adjustments. Again, the appraisers made no adjustment for concessions. Of course, this tends to inflate the appraisal results and undermines the credibility of the appraiser. Did y'all hear me on that? Did y'all hear me on that? So those special incentives that I just showed you, you guys, it doesn't matter whether or not they're the seller offering. It doesn't matter if it's just seller concessions, because you just read that. Anyone that is associated with the transaction must disclose the concessions. They're not doing that. You guys, they're in so much trouble. I'm telling you, that's why I think by 2026, they're going to be summons to Congress, and Congress is going to ask them, WTH. But even if it was just the sellers that they had to report, I just wanted to read this affiliated business disclosure statement from Lennar, which basically says regarding a Lennar mortgage, Lennar owns directly or indirectly 100% of Lennar mortgage. Lennar owns Lennar mortgage. Lennar mortgage is kind of the seller. The seller must report these things. They're not. And just to show you guys what that looks like, here's an example of an appraisal right here, okay? So I want to direct your attention to 1, 2, 3, 4, 5, 6, 7, 8 rows down. So 8 rows down on the appraisal says sell or financing concessions. Again, like I just read to you guys at the beginning of this video. And if you look at comparable 2, which is this row right here, you guys see that they did do an FHA loan, and the closing cost credit, CC, closing cost is $15,000. Therefore, they subtract, you see this here, they subtract $15,000 from the gross value right here. So that negative $15,000 is what I'm trying to explain to you guys. They are not reporting the prices have plummeted even more than 16%. It's just no one's enforcing these rules, except, however, Fannie Mae did just warn them that they are starting to knock on doors. Now, here's something else that's happening. So sometimes they'll actually report the seller's concessions, but they will not remove that from the value. So here's something right here. This is an arm length transaction. It says FHA. That green arrow is pointing to $3,000, which represents seller concessions of $3,000. But look at this red arrow is pointing to the lack of adjustment. So this appraiser noted it, but they did not subtract it from value. And they do another example with comparable to. This is a VA transaction. $4,500 in concessions, and they did not make an adjustment. You can see that here. So basically you start with the gross value, you make all of these adjustments, and you get your net value down here, which is shown by the blue arrow. So they, again, they're not doing it correctly. They're not doing it correctly. Thank God I've been in this business so long and I understand what's going on, because this, again, these are realities of what's going on in the new home niche right now. Now, I've also heard this ridiculous, egotistical, maniac narrative that the only reason why prices are down with new homes right now is because of shrinkflation. The very people that are saying this aren't even looking at the data themselves. You guys, ego matches assumptions. The bigger your ego, the bigger your assumptions. Let's take a look at shrinkflation now. And we're just going to simply go to the U.S. Census data now. That's last reported on Q3 of 2023. Now, as I noted earlier, that home values started going down for new construction in Q4 of 2022, which is basically October. So I want to note the medians, and this is for single family units. Okay, so everyone don't freak out. I'm showing you exactly what I'm talking about, unlike these egotistical bulls, single family units. Okay, so Q4 of 2022, again, which is when values started going down, the median square footage was 2,207 square feet. The average square footage, you can see here, I'm highlighting, was 2,468 feet. So now let's go all the way down to Q3 of 2023. You can see that the median square footage went up. What? It went up. It didn't go down. This shatters, destroys the shrinkflation narrative because it went up. Not a lot, but it didn't go down. That's the key thing, you guys. Median square footage from that time point went up 14 square feet. Holy smokes. Now, the average square foot did go down, but it only went down 38 square feet. It went down less than 2% the size, and yet the values have plummeted almost 17%. Do y'all see the problem here? So again, median square foot did go up. However, average square foot did go down slightly at 38 square feet. So I would say if you guys want to continue to trust these bulls, that's fine. Trust them, but verify. And that is the premise why that I have everything linked in my description. Now, in conclusion, here's what's going on with new homes. We have price discovery going on. How far it goes, no one knows, because we don't have a recession and we don't have any type of unemployment. But I will also say the big problem here is everyone, not everyone, but most people that purchased at the peak of 2022, around October, Q4 of 2022, are the biggest at risk of getting completely wrecked. Imagine 1 year ago purchasing a house for 15% more than what they're selling for today. Seriously, you guys, imagine that. Losing that type of equity normally doesn't even allow you to refinance into a lower rate, because remember that time last year we had high interest rates near 8%. So, well, unless you went with a new build, probably it's 4 or 5%. But my point is you can't refinance. And the biggest thing of all, if any emergency happens or you can't afford to make a mortgage payment anymore, you can't sell. So it's very, very risky to purchase new construction without getting an absolutely great deal. Not just an okay deal, a great deal, because again, we see the price discovery happening. The prices are absolutely plummeting. They're borderline committing fraud to keep everything propped up, and it's still not working. So my question for you is what happens when we get our 6 months of supply for existing homes? Think about it, you guys. And we're not even in recession, and we don't even have unhinged unemployment. Some things to consider if you're out there investing in real estate. Now, other than that, you guys, if you are out there investing in real estate, I hope this data helps. I wish you luck, and I hope you win.